Brian Dixon, president of Off the Chain Capital. Thank you so much for joining me today. Now, I do want to just dive on in. First question I want to ask you, when we're talking about the stock market, obviously we talk about brokers that do help out with those larger investors, and it's kind of the same thing when it comes to the crypto world. Can you talk to me a little bit about what Off the Chain does for its clients?
Yeah, absolutely. So I just want to kick it off. We are a registered investment advisor with the SEC. So a quick compliance disclosure about our discussion today. Nothing that I take should be construed as investment advice. The digital asset space is very volatile and risky. And, I may make forward-looking statements, so please don't place any undue reliance on those. But as a synopsis about what Off-the-Chain Capital does with our fund that we manage. So we manage one private investment fund that is highly concentrated in blockchain assets. And our investment style and strategy is similar to Warren Buffett's strategy. So we are traditional Graham Dodd, Warren Buffett, deep discount value investors, and we apply that strategy to the blockchain markets. So if you break down our portfolio today, about half of our portfolio is in discounted private equity and profitable what we would consider blue chip blockchain companies that are private businesses. And we go to early employees and seed investors and act as a liquidity provider so we can buy their shares from them at a discount when they're going through life events. So usually they're forced or motivated sellers. They're having a child, they're getting married, they're having, buying a home, whatever that situation is, and they need some liquidity for the value they've built in their equity. We will act as that liquidity provider to purchase those shares at a discount. That makes up about half our portfolio today. The other half of what we do is investing in what we characterize as mispriced digital assets. And basically that is allowing us to go out in the markets and finding unique investment opportunities where we're acquiring digital assets at a discount through things like bankruptcy proceedings or these unique special situations.
So you did mention the blockchain a little bit. I kind of wanted to dive a little deeper into that when it comes to the amount of hacks that we're seeing, especially with these coins that are now going onto the blockchain and introducing the swap functions to be able to swap between coin to coin. What's your real take on all of the hacks that are going on, and what's corporations like Off the Chain doing to make sure to protect their clients' assets?
Yeah, so we take a really long fundamental view of our investment thesis for how we're allocating to digital assets. We're not investing in the early stage venture style protocols and blockchains and companies. In fact, that's very important to our strategy is these companies have to be very mature for them to be a candidate for us. And they've already gone through most of that venture stage risk. And the venture style, where you have a lot of these early stage protocols and blockchains that are developing, a lot of these are nascent technologies, and there could be security vulnerabilities. But I want to be very clear because a lot of the security vulnerabilities are happening on some of the newer blockchains and technologies that are much more centralized than the decentralized blockchains like Bitcoin. So as an example, the Bitcoin blockchain itself has never been hacked. There's been exchanges that hold Bitcoin on the exchange. It's a centralized company. Those exchanges have been hacked, some around the world. But the Bitcoin blockchain itself has never actually been hacked. Now, with some of the newer emerging technologies, we are seeing different protocols that are in the smart contracting space, as an example, that'll have different smart contracts that would have vulnerabilities in them. And so these security vulnerabilities would allow a cybersecurity threat to infiltrate it, to be able to steal client assets from these protocols. And a lot of the smart contracting space is still very nascent as well. It's an emerging technology and asset class. There's a lot of different crypto assets and protocols in the market. So you have to be very, very careful about how you're engaging with these different systems. But what we're seeing today that most of the hacks come from these vulnerabilities within the smart contracts themselves.
So when we're taking a look at a lot of these investments, we see Cathie Woods getting rid of Coinbase for a major loss. I mean, even if she had sold it right now, she wouldn't have lost as hard as she did. We see Elon Musk and Tesla selling 90% of their share of Bitcoin, even though we are starting to see signs that the crypto winter might be ending, especially with the CPI data that we got just this week. What does off-the-chain capital and what should crypto investors look for when it comes to smart investments and really going into, as you said, those kind of legacy companies and legacy investments that would really kind of stabilize their portfolio against some of the volatility that we've been seeing in the crypto marketplace?
Sure. Yeah. Well, I can't provide any specific financial advice in terms of how people should be looking at investing in specific companies or protocols. But what I can say is, education around how to be thinking about the markets in general. So if we look historically around digital assets, crypto has gone through very similar cycles in terms of how these assets appreciate and then how they have a downtrend and will go through an accumulation, expansion, reaccumulation, and then a bear market again. And it's happened pretty consistently 12 to 18 months after the Bitcoin halving. So if you look at the rest of the crypto markets, everything is very correlated to the movement of Bitcoin, right? When Bitcoin's going up, a lot of the rest of the markets are going up because people are trading in and out of Bitcoin to other digital assets, and vice versa. When Bitcoin goes down, we see a downward spiral with a lot of other crypto assets as well. And when you look at the fundamentals of the Bitcoin network, Bitcoin, every 210,000 blocks that are mined on the Bitcoin blockchain, there's an event called a halving. And what this halving does is it cuts the supply of new Bitcoin that gets mined and issued into circulation every 10 minutes in half. And if you spread that out over a yearly timeline, 210,000 blocks takes about 4 years to occur. So approximately every 4 years, we're going through a Bitcoin halving cycle. Now, historically, 12 to 18 months following this halving cycle is the best time to be exposed to Bitcoin and the correlated crypto assets, because that's where we go through these accumulation phases and then these large bull markets. And another interesting statistic, if you look historically throughout these bull markets, a lot of times what happens is Bitcoin will go through a bull market and it will reach a new all-time high. And then when it goes through that next bear market, it may drop 50 to 80% of its value or more. And then it will go back down to where its former all-time high was. And I'll give you an example. The last bull market that we had, aside from the last couple of years, was back in 2017. And at that time, Bitcoin went from a couple $1,000s up to approximately $20,000 in December of 2017. And then in 2018, it dropped a significant amount of value and went back down to about $3,000. Our most recent bull run that happened last year in 2021, Bitcoin hit an all-time high of about $67,000. And then through this current bear market that we're in, it declined back down to about $20,000 to $24,000, where it's hovering around right now. So an interesting trend that you see over time is that when we go through a new bull market and then it drops back down, the floor has tended to be around what the former all-time high was in the previous bull market. Now, there's really no rhyme or reason to that as to why it happened except an increase in adoption, but it is an interesting data point. And so what I can say is that if you're looking at the digital asset space, right now, the markets have had a tremendous pullback from where they were as about a year ago, or around when Bitcoin was at a former all-time high. And because of that, you're seeing a lot of digital assets and companies that we would look at as being discounted, right? Like we have a very strong conviction that the adoption of Bitcoin is going to continue to increase. It's growing by over 550% a year. And as Bitcoin continues to grow, the rest of the crypto asset market continues to grow. And you're seeing more and more projects in all these different verticals and things like decentralized finance and NFTs and a variety of different domains in the crypto universe. And if this market repeats like what's happened this past couple cycles, it's probably not going to be too much longer. Then we're going to start to see a turnaround in the price movement. And when Bitcoin starts to move again, we're going to see the rest of the crypto market start to move. And we're going to see increases in the valuations of the public crypto companies and the private crypto companies. And so the way that we look at the market right now is we're going through, probably toward the tail end of the bear market. And before long, we're probably going to start to hit that accumulation phase. And then that'll expand and we'll have a reaccumulation. And then we'll probably be back in a bull market. It's difficult to time exactly when that's going to happen or how that's going to look because there's going to be different macro triggering events. But it's had a very systematic pattern since Bitcoin was created and launched into the public in 2009. And so what I would say to people today is, pay very close attention to the digital asset space, really do your homework and do as much education as you can. because the way we look at the market right now is that basically everything's on sale. There's a lot of discounts from where we think things are going to be in the coming years.
Yeah, it's a very interesting point. I did kind of want to touch on the number 2 token too. With the merger we're looking at with Ethereum, with them saying on ethereum.org that it's going to be 99.5% more energy efficient, thus allowing miners to get more bang for their buck, especially in those parts of the country and the world that are a little bit more expensive when it comes to energy. And then we did have Jim Cramer just, I believe it was yesterday or maybe Wednesday, going out saying today's a new day, it's time to buy Ethereum, which, as you know, he hasn't really been on that cryptocurrency train for a while now. So having him go out there and having really cryptocurrencies kind of get more mainstream, what's your take on other cryptocurrencies kind of maybe not overshadowing Bitcoin, but definitely becoming more of a contender?
Yeah, sure. So I think you have to look at crypto assets in terms of what their utility value is, right? So if we look at Bitcoin, Bitcoin is solving the fiat money printing problem as a new monetary standard and digital gold in a sense. And that's what its use case is. And it's serving that and doing a very good job at that because it has a finite supply of 21 million that will ever be mined into circulation. Ethereum has a very different value proposition. So I don't think it's fair to characterize Bitcoin versus Ethereum because they're solving two completely different problems. So when you look at Ethereum, this is a smart contracting platform, and it's created a tremendous amount of value by all the business applications and protocols that have been developed on top of the Ethereum platform. And with that, there's a lot of excitement, like you noted, around this upcoming merge. Now, the tests about merging from proof of work, which is where there's the hardware-based energy consumptive mining process to generate the digital asset, to proof of stake, which is a very different process about how these nodes are validated and the transactions are verified. Now, proof of stake is less energy intensive, that is for sure. But that's not to say that the use of energy in creating a digital network is a bad thing. You know, if you look at Bitcoin's energy usage, that makes up 0.1% of the world's energy. And over 50% of the mining network is actually renewable energy. And so that's a higher renewable fuel mix makeup than any other industry in the world. And it's sparking more innovation in renewable energy. And what it's doing is it's translating electrical energy into digital monetary value. So it's a very efficient and important use of energy. Now, if we shift to Ethereum with what they're doing, this merge, there's people that are very nervous about the merge, and there's people that are very excited. So I've heard in the market, some people say that this merge from proof of work to proof of stake is almost impossible to actually accomplish. And then I've heard other people say that they're very excited and it's going to run very smoothly. And if we look at what's happening in the market, the tests that Ethereum has done over the recent months from moving from that test proof of work environment to a proof of stake environment, which is the new consensus mechanism they'll be transitioning to, has gone successful so far. And so I believe it's slated for mid-September that they're planning to do the official merge and move from proof of work to proof of stake. And we will see what ends up happening when they actually do it for real. It'll be interesting to see. There's very possibly going to be some hiccups that'll occur along the way. And it'll be interesting to see how all the protocols built on top of them operate as they do the shift as well. And so I think that when you look at Bitcoin versus Ethereum, you're looking at those as two very different things, right? Bitcoin is this monetary network. Ethereum is a smart contracting platform where there's all these different types of business applications being built on top of it. And a lot of people are very excited with the merge. And I think we're starting to see investment behind Ethereum because of that merge, because if it does go successfully, I think it will accrete a lot of value in a short period of time, and it will implement a deflationary asset distribution in the coming years from where it's currently at today.
Yeah, that's awesome. So finishing off, I kind of want to ask you, this week has been, these last 2 weeks, I should say, has been tremendous for the financial markets, for the crypto markets. We're looking at the Feds increasing the rate by 75 basis points. We're looking at the Bureau officially announcing that, yes, we are in the middle of a recession with the two negative GDP growth numbers. But we're also seeing the CPI data showing that we are maybe on the downward trend when it comes to inflation. What are you telling your clients right now? And really, what's your prediction, without bringing out your crystal ball, of what the future might look like with all of these new details that we just got in the last 2 weeks?
Yeah, so just the initial information yesterday, the CPI information was bullish for the markets. I think we saw a rebound in some of the markets. Bitcoin's up, Ethereum's up over the last 24 hours. And one thing's for sure is the government, regardless of CPI, they're not going to quit printing money, right? They just printed a Inflation Reduction Act to reduce inflation by printing more money. Not totally logical, but that's what they're doing. And then they have all these other new bills where they're going to be printing a lot more money. And so what that tells me is that as long as the government continues to print money like it's going out of style on an unsustainable fiat standard, we're going to be hit with inflation in the long term. Our purchasing power will decrease. The prices of goods and services will increase over time. And so to me, that makes digital assets a very attractive asset allocation, because Bitcoin, as an example, starts to really fight against that fiat standard, right? And so we're seeing more people that are recognizing what's happening with the governments and central banks. And even when the government releases their CPI figures, they're always dramatically less than the real CPI figures, because they're cutting out important metrics that are the very basis for which those CPI measures should be measured, right? And so what's really interesting about it is, they'll push it out in the media, and then people will get all excited, the markets will react, but they're never really telling the truth about what's going on with the figures, in my opinion. And so when you look at the digital asset ecosystem and how it's reacting to this, at first, when the inflation rates were much higher, the Bitcoin market and the crypto market dropped a little bit. And I think what we saw there was people that were treating crypto as a risk on asset, like a risky technology stock, started selling. And when we actually look at the analytics of the blockchain networks, the people that were selling were short-term holders of digital assets, people that had likely purchased digital assets in the last 150 to 160 days. But the long-term holders that have been holding Bitcoin and crypto for many years, those individuals weren't selling as much, because they're believing, have the conviction of what's happening with this digital asset movement. And so I think when the government is putting out this information, you really have to pay attention to what they're doing and not what they're reporting and what they're saying. And what they're doing is they're continuing to pass legislation that is printing money out of thin air, which is stealing our time and energy away from us for producing the value in the monetary system that we have. And so as we continue to see the governments around the world take these actions, I think it makes a stronger conviction for people to educate themselves around Bitcoin and cryptocurrency, because it really is this parallel system that's being developed right now. And in my opinion, at some point in the future, we're reaching the point where people are going to opt out of the traditional system and opt in to a Bitcoin and crypto standard, right? And I think that's what's happening right now with society. More and more people are waking up. They're realizing what's happening. Because when you look at the fiat system that we're on, Nixon took us off the gold standard in 1971. So it's been a 50-year experiment that's failing before our eyes right now, because the money printing is so excessive. And so because of that, people are eventually going to realize when one system is failing, you opt out of that to a new emerging system. And what I believe is that the failing system is fiat, the emerging system is Bitcoin, and the remaining digital asset ecosystem, the ones that ultimately survive, because I think that the vast majority of crypto assets in existence today will go to zero through some shakeout phases over time. And we even saw that with the most recent downtrend in the market with some of these companies and protocols that blew up. But the ones that have truly innovated in sustainable business models and create very novel business applications for the future, this parallel system is going to replace this traditional system over time. It's not going to be fast and easy, but over the next 5, 10, 20 years, we're going to see a fundamental shift where people opt out of the old and opt into the new.
Makes total sense. And, definitely taking a look at what they do rather than what they say. Very important. Bryan Dixon, president of Off the Chain Capital, thank you so much for joining us today. I really appreciate your time.
My pleasure, Brian. Thanks so much for having me. Thank you.
Thank you.